Time of the morning when we start talking money matters, and this week we've been looking at credit cards, why you would want to have one and exactly what to look out for in order not to be defrauded with your credit card. But equally important is to know all the possible options that come with your credit card, and somebody who knows a lot about that is Mr. Warren Wilkinson. So how are you?
Good, and yourself?
Always good to have you here.
Thanks.
So let's talk about all the possible options that come with your credit card. Why is it, firstly, why is it so important to know it?
I think just it's very important that every person who would like to make use of a credit card needs to sit down with a CFP or with the bank advisor or whoever is trying to get them to buy a credit card to really understand what they would qualify for. Because there's no point in getting a credit card and not understanding what are the terms and conditions, how much do you need to pay every month, you know, what are the interest rates and what are the costs, etc. Because if you just get a card and you don't know how to use the thing, you may end up getting a bad credit record because in most cases you're a student or somebody who's just started working and you don't have enough of a credit record to get a bond yet or to buy a car yet. So to get a credit card is actually one of the starting points of actually building a sound credit record with a bank and with a banking institution. And
therefore, I mean, it's obviously so important to do it with a credible institution. Like, for instance, if you get let's say, a Woolworths Silver Card, you know, they take care of you, knowing that you must be able to earn 24,000 Rand per annum in order to qualify for that, you know, and keep you within bounds, because it can get out of hand.
Yeah. And I think the main thing that I'm trying to encourage clients to do is to make use of the card for what it's there for. In other words, make sure that you understand all the benefits and all the discounts that you're able to get and make use of those things. Try as much as you can not to get into beyond a 55-day kind of period where you've bought on credit and that money is not paid off within 55 days, because then it starts attracting interest. Which is pretty much the converse of investing. So, you know, it's dragging you deeper into a negative balance with when that interest starts accruing on the card.
Yeah. Now, when it does come to credit cards, there are an insurmountable amount of costs all around it. So what are the specific ones that one should, or the key ones rather, that one should look out for?
Yeah. Well, again, you need to do your homework. It's important that you shop around because various credit cards will have various pros and cons, a lot of discounts, a lot of partners where you can go and spend to get discounts. But you're quite correct. I think, you know, looking at the cost, what is the annual fee that you're going to pay to have that card? And if that's something that is not affordable, well, then maybe you need to look at another option, you know. And again, just looking at the interest rates. And if you're somebody who already has a bond and you've already got car finance with a bank and you've got a big portfolio with a bank, then you can sit down and maybe negotiate with them to get you a bit of a reduced rate. But then you need to be an established banker.
Yeah. But give me a breakdown, because I think something that most people are kind of confused about, rather, is how the interest is calculated, especially with the whole 55-day interest-free period.
Well, look, if you're going to go and spend, let's say your credit limit is 5,000 Rand. If you've managed to go and spend 4,000 Rand on that card, then it's going to be interest-free. In other words, there's no interest for the first 55 days.
That you pay it back, and that's
correct. So
you pay it back.
Yeah, so if you put the 4,000 Rand on your account at the end of the 55th day, that's what you're going to be paying. Pretty much what you paid for the item. So there's no interest that has been charged for you having that facility. It's when you sit down and you go, well, now I've spent 4,000 Rand, but I can't afford to pay it because I've had a motor claim, or I've had to pay it in excess on my property insurance, and you need to pay it off, then they'll typically request that you at least pay 25% of the outstanding amount.
Okay.
And then the balance, let's say you managed to put on 500 Rand, the other 3,500 Rand is going to attract interest at a rate that is then depending on the type of card that you have. So, you know, a black card with Woolworths will have maybe have a different interest rate than somebody with a silver card. Yeah.
Now, one of the things that shocked me when I got my credit card was the high cost of transacting at an ATM and actually drawing money. I mean, like we were talking about the cost to look out for, you need to know what the card is there for, right?
Yes, yes. I think, you know, if you're going to use a credit card, then you wouldn't want to go and draw cash out of it. You'd rather want to, from a safety aspect, use the card at the particular place where you're able to shop. But you know, often it happens that a particular petrol station, not that I'm saying you should use a credit card for petrol purposes, but, you know, if you happen to have to draw money because that's the only method of payment that they'll accept, then you just need to be very, very careful and manage that appropriately.
Also, thank you very much again for, once again, your pearls of wisdom. Really appreciate it. And to find out more about Woolworths Financial Services and all the great financial products they do offer, SMS the word breakfast to 42710.